Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas, which also includes in this chart right now, we also have ticker symbol UNG, which is United States Natural Gas, as the orange line, and then also ticker symbol BOIL, which is 2x leveraged natural gas, as the blue line here. So I just wanted to do a quick comparison on this chart of those, then get into the natural gas chart by itself, and then also UNG and BOIL. Looking at the chart here, what we can see is that since the start of February, so February 1st is the candle over here, we can see that natural gas has come down by about 12.31%, whereas UNG has come down by 21.36%. So it did not perform as well as natural gas. And so that would be because of futures rollover and I believe contango. And so that does drive UNG and as well as BOIL to not perform as well as the commodity. And so I thought that was an interesting comparison. And then also, as you might expect, since BOIL is 2x leveraged, that performed even worse than UNG. And so you can't see it on the chart. It is behind me, but BOIL has come down by 37.72%. And so, I do think that this is a good reminder of why BOIL is so much more risky, and then also why natural gas is the widowmaker. It does seem like it is pretty tough to win here, but I do think there are some signs that could suggest we are finding a bottom, potentially forming a wedge that could be bullish moving into the near term, but we may also go lower. So I did want to go over some of those levels with the natural gas chart and then also looking at UNG and BOIL. And so what we're looking at is natural gas closed on Friday, April 5th, before the weekend, at a price of $1.87.4, and it does look like it has retraced to the 50% level, going from the lows here hit on Thursday, March 4th, which were also the lows hit on Thursday, March 24th, and going up to the recent highs hit on April 3rd. That 50% level is at a price of $1.85. Current price is above that, being just below the 382 level at a price of $1.88.09. So hopefully we can reclaim that level in the week ahead, but it is quite possible that we do retrace to the 618 level at a price of $1.81.91, and that could coincide with testing this uptrend that I have drawn here, going from the lows hit on February 19th with a pivot point at the lows hit on March 14th. And so, I could see price coming down to that level with a wick to it, but hopefully we don't get any closes below it. I do think that would suggest further downside, like going to the 786 at a price of $1.77.51. But, with what we're seeing now and with this really, spinning top that could suggest this red day that we had on the 4th, going down over 3% on the day, this spinning top could suggest that the bottom is in, that we will be rallying off the 50% level and heading back up, potentially to test this downtrend, which is based on the pivot low hit on December 13th, as well as, the high hit on April 3rd. That does coincide with some consolidation that we saw here, that acting as resistance when we were forming what looked like was a bear flag before continuing down. Also, we did get a test of that level on January 23rd, a wick down to it before we got a bounce. Dead cat bounce before this consolidation and moves lower. And we also did test that as resistance over here at the beginning of March. We did test it again at the beginning of April. And so in the coming weeks, perhaps this coming week, we might be moving higher to test that level and, really getting above $2 a share. The high on April 3rd was a price of $1.98.1. So if we were to be able to get a close above $2 a share, I think that would suggest price could be breaking out of this downtrend, potentially moving higher, like to test $2.20.9, which was this previous low hit on December 13th. So we could be getting a breakout this week. But we also could be, like I said, moving lower to test these downtrends. But I did also want to point out, it was suggested that this could be a head and shoulders pattern with the neckline being here. We did get a break below it, but that does look like it was a fake out because we did close higher, not only above that level, but also above this uptrending level here, which we might be retesting as support this week. So, I don't think that we did see the formation of a head and shoulders pattern. We did not get confirmation. I think that was a fake out. And so I do think that even if we do go lower, as long as we're not closing below $1.81 or $1.82, I do think that we could be finding a bottom if we are going lower and then moving higher to test this downtrend. So I do think, in this range that we're seeing, I do think that natural gas is closer to finding a bottom than it, was back here. And the pain that we've seen in these small moves to the upside, I think that might be over pretty soon, and we might be testing these higher levels potentially to where we can take some profits. So I am looking forward to that because it's been kind of tough holding the bag. But speaking of holding the bag, I am going to now switch over to looking at ticker symbol UNG, which is United States Natural Gas, as this is the ETF that I hold in order to get exposure to natural gas. And so UNG closed on Friday at a price of $14.87, being approximately flat on the day and not moving too much in the after hours, being at a price of $14.90 currently. And so what we see, just like with natural gas, with this big red candle day on the 4th, we do see what looks like could be a reversal signal with this inverted hammer that could be suggesting that a bottom is being formed right around the 618 level from this Fibonacci retracement. That is at a price of $14.87. Does also seem to coincide with this previous low that was hit on March 13th, being at a price of $14.83. So I would look for us to hold this level as support, potentially start to move higher, and ideally, if we can get a close above 1586 over the course of this next week, that would be looking really, really good for the ETF. And so that is what I am looking for, and that is what I'm hoping for. But if we do continue lower, it is quite possible that we will find support at the 786, which is at a price of $14.60, which does coincide with a previous low that we saw that was hit on, let's see, February 20th, that being at a price of $14.56. So hopefully we don't go lower than that if we do go down. But if we do, do brace for that. But I am feeling pretty good about the bottom potentially being formed here right around current price of $14.87 with a low on Friday being $14.82 and a low on Thursday of being $14.80. I do think those were potential dip buying opportunities before we start to move to the upside. And so, I would really look for closes above the 382 at 1525. But I guess before then, we need to be getting closes above 15, which does coincide with some levels here, like the 50% retracement at $15.06. But hopefully, we can get a close the week above $16 a share. I think that would look really good. So that's what I'm hoping for, and I'm hoping for a good amount of upside because I personally would like to trim some of my position because I do feel like I added a little too much considering how low it's been. But given that sentiment, that might be suggesting that the bottom's in, given that, I'm getting a little desperate to trim. The bottom might be in, and we might be seeing a lot of upside if bullish sentiment has completely disappeared. That could be a sign that the bottom's in. So I'm hopeful about that. And then now looking over at ticker symbol BOIL, which is 2x leveraged natural gas, I do have, the same kind of Fibonacci retracement here, but it does look like we broke below the 618 at a price of $13.38, having closed on Friday at a price of $13.31. However, in the after hours, we are, coincidentally at that price of $13.38. the 618, which does seem to correspond with a number of levels that we have hit in the past, really just being the 1618 extension from this Fibonacci retracement here, and then also being the low hit on, I believe, February 15th, 1345, and then also, this low here that was hit on March 13th, that being at a price of 1328. There does seem to be a confluence of a lot of levels, a lot of bottoms here at current price. So I do think that could be suggesting that the bottom is in, but if it is not, as we did close on Friday below the 618, we could be heading down to the 786. That is at a price of $12.90. But of course, hopefully, we are seeing a bottom here, as we do also see an inverted hammer candle following this big red move down more than 7.5% on the 4th. But hopefully, we are seeing this reversal signal and that we could be moving up to reclaim the 50% retracement at a price of $13.72 or potentially getting above $14, closing above the 382 at a price of $14.07. But ideally, we are going to be seeing prices above the recent high that was hit on Wednesday. That was at a price of $15.17. If we can get a close above that, I do think that could be suggesting that the bottom is in, and we could be seeing some notable upside moves like to the 236 from this retracement here, which is at a price of $19.88. It would be amazing if this could get back to, $20 a share. But if not, do look for a close of the week above 15.17. That could be suggesting, that we are in the clear, that the bottom is behind us. But if not, do keep your chin up. I think we are near the end of, this painful bottom formation. Hopefully we start to see natural gas and other commodities rip into the week ahead. That is what I'm hoping for. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.